Coming up on today's program, South African unions reject job cuts proposed to rescue South African Airways. Mining companies in Zambia suffer 30% drop in revenue in the first quarter of 2020 on COVID-19 pandemic, and Nigerians face tough job markets amid coronavirus outbreak. Thank you for joining us on the program. I am Bisi Adibayo. We kick off with intraday numbers coming from the African markets, which were mostly in the green at intraday. Here in Nigeria, the all-share index turned positive with a 0.08% increase. The South African GSE index was also up 1.13%. Egypt's blue chip index lost 0.4% on Thursday, while the Kenyan Burse closed flat also on Thursday. Most major stock markets in the Gulf ended the week on a positive note on Thursday ahead of a meeting between OPEC producers and their allies to discuss future output strategy. In Dubai, the index added 0.36%, supported by a 3% rise in lender Emirates NBD and a 2.1% increase in Dubai Islamic Bank. The Abu Dhabi index was, however, 0.7% down, but the benchmark index in Saudi Arabia rose 0.6%, with oil giant Saudi Aramco gaining 1.4% and petrochemical firm Saudi Basic Industries advancing 2.5%. The Qatari index gained 0.98%, and that was led by a 2.1% increase in Qatar Islamic Bank and a 2.3% rise in petrochemical firm Industries Qatar. And in the UK now, the Office for National Statistics released two big data this morning. That's the public sector net borrowing and the retail sales. Well, let's chew some of those numbers with Juliana Olayinka, who's standing by from our London studio. Good afternoon, Juliana. So this morning, you spoke to Chimi about the ONS figures showing government borrowing increased by £55.2 billion in May, which, of course, is the highest borrowing in any month since records began in 1993. Is this data in any way driving sentiment of the markets?
Good afternoon, Bisi. Even though those statistics from the Office of National Statistics are pretty shocking, it isn't actually driving sentiment at intraday. There's a huge rally in the oil majors at the moment, and that's because of the price of Brent crude, and that's really helped push up the FTSE all-share. BP, they're up 3%. Royal Dutch Shell are up 1.9%, and as I said, that's a reflection of Brent crude. So at intraday, the all-share's up 1.23%. The FTSE 100 is up by 1.37%, and the FTSE 250 is up by 0.76%. In currencies, the pound is down against the US dollar by 0.31%, down against the euro by 0.28%, and down against the Japanese yen by 0.36%. It's also worth mentioning, Bisi, that something that's also pushed the equities here is retail data. We know retail suffered in the UK over the past couple of years, particularly during the pandemic. And now what we're seeing is that last month there was an increase of 12% month on month, which is much better than analysts had expected.
Now, Britain and other European countries are continuing for a push for a global digital tax on technology companies such as Google, Facebook, and Amazon, despite the US pulling out of negotiations this week. What does Britain hope to gain from this push?
Well, yeah, as you said, it's not just Britain. There are several other European countries. And basically what they've noticed over the past couple of years is that a lot of these tech giants are making a lot of money in local markets, but they're not putting enough money back into the local purse. And there seems to be a couple of loopholes or a couple of countries that they're using to divert the funds, and they're not happy about it. So they've been having this spat with the US over the past couple of months. And really, it doesn't affect the US, but because obviously most of the major giant tech companies like Amazon, like Google, like Facebook are based in Silicon Valley. US President Donald Trump and seemingly his Treasury Secretary Steven Mnuchin have taken personal offense to this. So basically they've started having negotiations about it, particularly as France, as alongside Britain, were really strong in saying that they were actually going to impose what probably works out to about 3% of their turnover in this new digitization tax. But yesterday, Mnuchin cancelled any further negotiations. Now, his spokesperson says He thinks it's because they would rather countries focus on the pandemic, but France have responded saying that the US are basically trying to provoke them. I believe the US have sent several letters saying that this is not how you treat one of your most important allies, and they have threatened to impose similar sort of taxes. I know a couple of months ago, Donald Trump was saying that he'll start imposing tax on French wine and champagne. So it's going back and forth, but it's an important discussion, and it's one that the OECD are really looking at, because as digitization becomes the normal thing, particularly post-COVID, there needs to be some sort of tax that all countries believe are pretty, leveled out and good for both sides of the coin, if they can ever be.
Juliana, it's the end of the week, and I'm sure you know I wouldn't let you go until you tell us, or probably give us, an outlook for next week.
Gosh, next week, what can we expect? I suppose it's going to be more COVID, I'm afraid. We've had an interesting week because on the one hand, we're seeing a second wave of infections rising in places like Beijing, in South Korea, in Hong Kong, and even Germany. But on the other hand, we had a breakthrough with dexamethasone, better get that right, which is an old drug that's been on the British shelves for decades, being the first clinically proven drug to reduce the mortality rate of COVID-19, which is a huge breakthrough. And British scientists are the first to clinically prove that that can happen. So it'll be interesting to see if there are more tests about that next week. Of course, as well, we had further negotiations of Brexit with British Prime Minister Boris Johnson meeting with Ursula von der Leyen and other counterparts to try and break this deadlock which they seem to be having. The time is ticking, and we are leaving properly again at the end of the year, but obviously nobody wants there to be no deal. So I suppose those are the two things that are going to ramble on into next week: Brexit and COVID-19. I believe those have been the same topics now, Bissy, for the past couple of months.
All right, Juliana, thank you so much, and do enjoy your weekend.
Thank you.
And let's cross over now to Asia, where stocks in the Pacific ended the week higher as investors continue to monitor the situation surrounding a recent uptick in coronavirus cases in some countries. The Shanghai Composite was up 0.96% to around 2,967.63, while the Shenzhen component added 1.51% to about 11,668.13. Hong Kong Hang Seng Index rose 0.97%. Japan's Nikkei 225 closed 0.55% higher, while the Topix Index finished its trading day little changed at 1,582.8. In South Korea, the Kospi closed 0.37% higher at 2,141.32. Shares in Australia saw gains, with the S&P ASX 200 up 0.1% to close at 5,942.6. U.S. stock futures were mostly higher in the early morning trade today, following a muted session in which traders grappled with disappointing unemployment data and rising coronavirus cases. Dow Jones Industrial Average Futures rose 153 points, but pointed to a Friday opening gain of about 106 points. S&P 500 and Nasdaq 100 futures pointed to a positive Friday open for the two indexes. Now let's take a breather from those numbers. Now, the two South African unions have rejected job cuts proposed to rescue the South African airline, which has cost the government more than $1 billion to stave off bankruptcy and will cost it about half that again to reform. The current plan, which would involve laying off about 90% of staff, leaving just 1,000 jobs, will cost at least 10 billion rand or $573.9 million. But the National Union of Metal Workers of South Africa and the South African Cabin Crew Association, angered by what they said was the mismanagement of SAA by executives, today rejected staff severance packages as too small and described job cuts as too wide-ranging. The unions say they reject with contempt the announcement that only 1,000 employees will be retained and describing the move as unleashing a job loss bath. The mining companies in Zambia have suffered a 30% drop in revenue over the 3 months to April due to the COVID-19 pandemic, and the fallout could last for at least 12 months. The Chamber of Mines says severe global restrictions on movement have hit mining supply chains and hindered the export and sale of copper, hurting company revenues and government coffers. The metal is Zambia's main foreign exchange earner and a key driver of tax revenues. Royalty payments are estimated to have come in at $60 million to $65 million over the 3 months from February to April, around two-thirds of the $90 million that was expected. A plunge in copper prices has also dented companies' revenues. The Chamber says mining firms would likely be grappling with revenue pressures due to the pandemic for at least 12 months. Oil prices pushed higher in early trade today, building on gains in the previous session after OPEC producers and allies promised to meet their supply cut commitments, and two major oil traders said demand was recovering well. Brent crude futures were up 2.84% to $42.69 a barrel, while US WTI futures surged 3.14% to $40.06 a barrel. Plans by Iraq and Kazakhstan to compensate for overproduction in May on their supply cut commitments also supported the market. The promises came out of a meeting by a panel monitoring compliance by OPEC+. Worldwide spending on the Internet of Things have been significantly impacted by the economic effects of the COVID-19 pandemic in 2020, although a back to double-digit growth rebound is expected both in the mid and the long term. A new update to the International Data Corporation Worldwide Internet of Things spending guide shows that IoT spending growing 8.2% year-on-year, over to $742 billion in 2020, and that's down from 14.9% growth forecast in the November 2019 release. Nevertheless, the IDC expects global IoT spending to return to double-digit growth rates in 2021 and achieve a compound annual growth rate of 11.3% over the 2020 to 2024 forecast period. The report says personal and consumer services, which includes hotels, theme parks, casinos, and movie theaters, will be the only industry with a decline in IoT spending this year, down 0.1% from last year. Still to come on the program, a look at the impact of the pandemic on Africa's agri-commodities. Do stay with us. Welcome back. A recent report released by consultancy firm McKinsey projects that the COVID-19 pandemic could cost Africa a whopping $4.8 billion lost in agricultural exports, while also affecting the livelihoods of 10 million farmers. But that report also mentions that cocoa exports could be reduced by as much as $2 billion owing to the fall in demand for chocolate, as well as a decline in general prices. Well, the founder and chief narrative officer at Clear's Advisory UK joins us now to discuss the impact of the pandemic on Africa's agri-commodities. Good afternoon, Ted. Thanks for joining us on the program. Tell us, how has the COVID-19 affected the current cocoa season, and what are the prospects for 2020 and 2021?
Well, I think the markets have been very jittery around cocoa. We saw in April and May prices surge to around £2,100 a tonne. Since then, they've fallen back to about £1,850. Now, it's still below the peak they were at back in July 2016 of around 2,500, but they are quite high, the prices. And I think that's because people are quite worried about what's happening to the current season. You could say that cocoa's lucky in that the lockdowns for the virus first started around the end of the main crop, and we're now in the light crop. So most of the crop had been produced. But I think there is real concern over what is going to happen for the beginning of the season. We not only have the potential for coronavirus to disrupt all of the value chains, the ports, the people who exchange the beans, but of course there are elections as well coming up in Cote d'Ivoire in October as well. So I think this uncertainty means I think we're likely to see prices rising. And really, the next few months are crucial. If farmers can't get the inputs they need, the financing they need for the next crop, then it's potentially we could see a very bad crop for 2020-21. We just really have to watch closely for the next few months.
And while we watch, Ted, in the past 10 years now, Africa has become one of the world's leading producers of cashew nuts. How are efforts to boost local processing advancing given the current pandemic?
Well, I think the cashew sector is going through an extremely difficult time in West Africa. We've seen it grown hugely. Traditional growers like Ghana and Nigeria have now been overtaken by upstarts like Cote d'Ivoire, which is now producing over 500,000 tons. And in fact, over half of the cashews in the world come from Africa. The problem is that there has been a massive drop in demand for cashews. I think the exports are down around 30% in Africa this year. We've seen prices internationally fall by a third. In Ghana, they're down almost half for cashews. And that's because nearly all of the cashews are exported raw to India or Vietnam where they're processed. And there's been a slump in demand there, and also a lot of the factories have closed. So when it comes to this issue of how do you get more value for the cashews, it all comes down to who is the off-taker, who are you selling them to? If you want to sell them in bulk, you won't make much money. You have to sell them specialist. So I think there's been quite a bit of investment, particularly in Ghana and in Nigeria and a little bit in Cote d'Ivoire to try and process nuts for export. But I think the key, as with all soft commodities in Africa, is local markets and local demand. There should really be some R&D into seeing how cashews can be pushed out more to the local population. And that gives you the support you need when international demand falls.
Now, we all know that West Africa imports large quantities of grain to feed its population, but how have these imports been affected, and is this sustainable in the long run?
Well, I think it's extremely worrying how dependent West Africa has become on food imports. If you think of traditional foods like cassava and yams, most of the population eat that, but the urban population has a taste for wheat and rice. And the fact is, every year West Africa imports around $2 billion of rice and $2 billion of wheat. On top of that, maybe $500 million as well goes into Benin, all of which is smuggled to Nigeria. And the trouble is that you can't grow wheat in West Africa, and rice you can't grow nearly enough, considering the demand there is on the urban population. So this is a huge burden, actually, on the import account of these countries. And I think the reality is there has to be a big push to try and push other alternatives. I know in Nigeria, for many years, they've been trying to push cassava flour, 50% mixed with wheat. I have tried it. It tastes kind of like normal bread. But the reality is, I mean, Nigeria is the largest producer of cassava in the world. It literally just grows in the ground. That is the sort of thing that should be developed into products for Nigerians and West Africans, so there isn't this dependence on very expensive and dangerous imports of wheat and rice from other countries.
Many thanks, Founder and Chief Narrative Officer at Clear's Advisory, Ted George, for speaking with us on the program. Now, many economies around the globe have witnessed reduced economic activities due to the escalating global economic impact of the COVID-19 pandemic. Here in Nigeria, some companies have laid off staff, fearing the impact of the coronavirus outbreak. A government report on the impact of the outbreak said 39.4 million people, which is a third of the workforce, may be unemployed by the end of this year. Let's see this report.
In Nigeria's capital, Abuja, Tosin Fadero is learning how to make knitted fashion wares, an interest she developed during a skill acquisition program at her year-long compulsory youth service stint. Completed in March, at the early stage of the coronavirus spread in the country, she began searching for a white-collar job to fend for her family of four.
There was no job, so I just thought that I learned tailoring skill when I was in school, when I was in my service year. So I have to continue to keep myself busy, not staying at home doing nothing.
Mary Uzoma had never been unemployed until March, when she was among those laid off by the transport company she worked for in Nigeria's commercial capital, Lagos. For the last year, in her role as a trainer, she traveled to all the Nigerian states to teach taxi drivers how to use the ride-hailing firm's software. But following Nigeria's first confirmed case in late February and the announcement of a lockdown in Lagos from March 30, the company decided to shed staff, fearing the impact of a coronavirus outbreak on travel.
It's been very hard finding something to do, and it is crowned around coronavirus because most organizations have gone into virtual work, so nobody wants to employ a new person. Rather, the few ones they have, they want to try to manage them and equip them to be able to use the internet to work without necessarily going to the office. So it's been very tough.
A government report on the impact of the outbreak says some 39.4 million people, some 33.6% of the workforce, may be unemployed by the end of this year. The government expects Africa's biggest economy to contract by 3.4% this year as a result of the pandemic, which has led to around 17,000 confirmed cases and more than 400 deaths.
If economic growth is a bit more suppressed, people will have less spending capacity. And if you've got less spending capacity, almost every sector is going to suffer. Of course, things like tech, they're a bit resilient, you'll recognize that. But eventually, even retail will suffer, even FMCG will suffer, because if people they don't have as much buying power as they had before, they're not going to spend their money. If there's fear in what's coming ahead, they're not going to spend their money. So you'll find that almost every economy, every part of the economy that depends on somebody spending money in order to thrive, which is the whole thing for the bulk of it, is going to suffer.
Many are looking up to policymakers to provide relief packages tailored particularly to Nigeria's vulnerable citizens to reduce unemployment and poverty, which are inevitably linked to this pandemic.
An open-air market in Kenya's western city, Kisumu, has been demolished, shattering businesses and the lives of many of its traders. Local authorities in the lakeside cities say they plan to rebuild and modernize the area. However, residents say given the impact of the COVID-19 pandemic, the demolition could not have come at a worse time.
Traders in Kenya's western city of Kisumu sift through rubble, hoping to salvage belongings after their shops and stores were recently demolished by the authorities. Florence Ongie's life savings are in these bags of second-hand clothes. She used to sell them at Kibuye, one of East Africa's most vibrant open markets. About 3,000 traders and up to 10,000 on Sundays will flock here. But the county government demolished the market overnight, leaving Florence and many others desperate. She finds it hard to understand that the government did this in the middle of a pandemic.
I think the government could have been wait for a while, so that when Corona ended, they can continue to develop the market. But for now, they have come. Actually, if you look around, people are supposed to keep the distance, and now people are scattered all over.
This could not have come at a worse time for Elizabeth Ogutu, who is disabled and sells vegetables at the market to help provide for her 7 children.
This place is where I have been doing my business and has provided for me and my children. So since we were sent away, I have been staying in the house and I don't have an income to feed my family. So I'm appealing to both the county and national governments to help us find a place to do business, because I don't know how to beg. This is the place I used to run my business from and support my family.
The local government insists the market was flattened as part of a multi-million-dollar plan to regenerate the area and eventually modernize it. They have promised to relocate the traders.
In our record and to our understanding, there's not supposed to be anybody, any soul in Kibuye. They started to sneak back, and at the beginning, the police tried to flush them out. They pleaded for leniency, and a few of them got left behind. But as what we know and what is in our record, there's not supposed to be any trader.
Their decision has left thousands of small business owners with an uncertain future during one of the worst economic crises to hit Kenya since 2008, when the post-election violence killed more than 1,000 people.
And that's where we end today's program. Thank you for watching. I am Bisi Adebayo.